So good afternoon to everyone. Let's move to plenary session A. And our speaker is Oliver Lansdell. He's not an engineer, so we're not going to listen technical things, which is the tradition of Tecnicelpa meetings. We are going to listen to somebody that knows the market. And at Tecnicelpa, I think we realize that the world is changing, and we need to know where are we? Where are we the Europeans? Where are we the Brazilians? And where are we the Chinese and all other people that are important players in our industry? Oliver is an industry analyst. He's a consultant with more than 20 years. I thought I knew him from 30 years or 40, but apparently it's just 20. And he has been working on Hawkins Wright since 2007, working as one of the editors of Pulp. Those are names that scientific people doesn't know, but commercial people knows very well. So he has been published in the Pulp Watch. He has been co-author of Outlook for Market Pulp, and is the principal author of Outlook for Dissolving Pulp. He is an expert on dissolving pulp. So if somebody in the audience has special questions about dissolving pulp, take advantage. Before joining Hawkins Wright, he was working for PPPC, which is the Canadian association that deals with data on trading. Oliver, the floor is yours. And thank you for coming from England to Tecnicelpa.
Thank you, Dolores. Very kind introduction, and good afternoon, ladies and gentlemen. Before I start, just a quick word to thank the conference organizers for inviting me to come and talk today. It's a privilege to engage with the scientific community. As Dolores said, I'm normally on the commercial side, so I don't often have this kind of exposure. It's a tough job, though, today, because my mandate is really to talk about what's happening in the pulp and paper sector. And right now, we're living through a period, I would say, of extreme kind of challenges. With challenges, though, there do become opportunities. And at the end of my slide deck today, I will try and leave you with a few observations about what opportunities are out there and how best to grasp them. But before I start, just a few words about Hawkins Wright. We're a very small UK-based consultancy that specializes in the provision of market intelligence to the international pulp and paper sectors. To that end, we typically provide a range of multi-client reports that provide supply, demand, cost, and price analysis. We also offer a range of bespoke consultancy services, and the work that I've typically been engaged in the last few years has really revolved around market due diligence for investments in new pulp and paper mills in Latin America, but also Asia and Europe. This is the spec of what I'm going to talk about today. I'm just going to give you a broad-based overview of global kind of paper and board demand, and I'm then going to really focus on some of the mega trends which we're seeing. And as I just alluded to, a lot of those mega trends present challenges for the European sector. And of course, at the end of the slide deck, I'll just say a few words about those opportunities. So, how bad is it? I thought I'd start with this slide here, which just shows you the evolution of pulp prices for the three benchmark grades. So you've got hardwood, softwood paper grade pulp, and dissolving pulp. And I present this in real terms from 1990 through until present. And essentially you can see that pulp prices today are at historic lows. We've never had it so bad. And of course there are various reasons for this, and one of the main reasons is that we've seen consistent investment in pulp capacity in the last 40 years. Typically that investment has been in world-class assets, and that's lowered the cost base of the industry. And those cost savings have been passed on to the consumer in the form of lower prices. So it's only natural that we've seen this price deflation. But more recently, I think this price deflation has been accentuated by various structural changes. And these are the kind of mega themes that I'd like to talk about today. Right now, obviously, we have a lot of macroeconomic headwinds, but we're also seeing structural issues in China, not least increased pulp production in China and a lot of oversupply of paper and board. And those will be the two themes of my presentation today. So, what about the here and now? So this slide just shows you the evolution of global paper and board production by grade from 1990 through until present. And I think the narrative is well understood. So when we look at the data, essentially, we've seen no growth in global paper and board production for 10 years. And the narrative goes that we've had this secular decline in graphic paper demand that has obliged a lot of capacity rationalization, and that rationalization of capacity has offset the growth that we've seen in the specialties sector, the tissue sector, and the packaging sector combined. In aggregate, printing and writing paper production is off by 46 million tons in this 10-year period. And again, that's more than offset or completely offset the growth that we've seen in those other sectors. If you look at the proportion of printing and writing production, its market share of the overall market, it's actually fallen from 32% 10 years ago to just 20% today. So big challenges there. What does this mean for fiber consumption? Well, if you're a paper and board producer, you essentially have the use of 3 different fibers, main fibers for your production. So you can either use waste paper as a furnish, you can use market pulp, which is globally traded, or you can backward integrate with your own pulp. And that's what this chart just shows you here. It shows you the global evolution of demand for those 3 different fibers. And the red line just shows you the evolution of waste paper demand or utilization. And you can see that its use has really plateaued in the last 10 years. We've not really had much growth. And again, that's really linked to what's happening in the printing and writing paper markets. The major source of high quality waste paper comes from the printing and writing sector. Since that sector has contracted by nearly 50 million tons, it's only logical that there's less waste paper available to be used, and that's led to this kind of plateau in utilization. The green line shows you the use of integrated pulp. It's been in a long time kind of secular decline, and that's very much linked to trends in paper and board production. So if you think about the capacity rationalization that our sector has seen in the last 30 years, most of it has taken place in Europe and North America. And where we've seen paper machines closed, quite often we've also seen the pulp lines closed that have furnished that production. You'll note, though, that the use of integrated pulp did track higher in 2024. I'm going to talk more about that in just a few minutes, but we think this is the start of a new trend back towards integration. And of course, the blue line there just shows you the use of market pulp. It's grown in each and every economic cycle since 1990. And again, I think the reasons for this are quite well understood. If you look at the composition of paper and board demand growth, the most consistent driver has been tissue. And that's led to a lot of investment in new tissue capacity. Because of the scale of tissue mills, more often than not, they're non-integrated, which means that their furnish has essentially come from market pulp. And we've seen a major trend towards virgin fiber tissue away from waste paper content tissue. And again, that means that we've seen virgin fiber displacing the use of waste paper at the margin. But I would argue that the biggest driver of market pulp demand during this period has been the growth in non-integrated paper and board production in Asia. And essentially, I mean China. So if you look at the global picture, we've had all of this capacity rationalization in the West, but in the East, in China specifically, we've had huge investment in paper and board capacity in the last 40 years. And because China has traditionally been a fiber-scarce country, a lot of that investment in paper and board capacity has been furnished with imported market pulp. How important has China been? this chart just shows you the importance of China to the pulp market. So on the left, you see the evolution of market pulp demand segregated between China and the rest of the world. And you can see that in the last 10 years, the China market has grown by 10 million tons at 5% per annum. The rest of the world, we've seen zero growth in market pulp demand. And now, when we talk about the individual grades of market pulp, China obviously has a huge kind of share in creating that demand. And that's what this chart on the right just shows you. So in terms of total market pulp demand, China accounts for 45% of global shipments. In some grades, it's as high as 77%. So China has been this key engine of growth. And of course, with that growth, we've seen huge investment in new pulp capacity. And the epicenter of that investment has been Latin America. And in the last 10 years, we've seen about $30 billion invested in new pulp capacity, and that excludes the forestry resource. So we've seen huge investment, and that's really been geared towards this China growth story. The challenge now is that a lot of people are concerned, ourselves included, that the China growth story has come to an end. And, you see that in the import statistics. So this just shows you the evolution of Chinese market pulp imports by grade from 2019 through until present. You can see in the last 6 years, we've only had 3 million tons of growth. That's way below the historic trend. And actually, the total volume in 2024 wasn't too different to what we saw in 2020. And again, we see a lot of challenges in China now, not least from demographics. The population has peaked. The working population was also peaked, which is weighing on the economic growth. And in our sector specifically, we've seen this slowdown in import demand for market pulp because we've seen huge investment in pulp capacity in China. And this is really the legacy of COVID. When COVID hit, the Chinese government injected a lot of liquidity into the Chinese economy, and a lot of this money has found its way into the pulp sector. And of course, we knew about this. We've known about this for many years. And I think the industry was actually quite complacent because we've seen investment in Chinese pulp capacity before, but we weren't worried about it because they didn't have the fiber to run it. But that's changed as well, and I'll explain shortly. But this chart just shows you kind of the evolution of Chinese pulp production by grade from 2005 through until this year. And you can see pulp production was really stable between 2013 and 2020 at around about 11 to 12 million tons. But in the last 5 years, we've had this huge acceleration. And most of this has been an integrated pulp supply. And in the last 12 months alone, we've seen Chinese pulp capacity grow by 7 million tons. And when we look at the investment landscape, we consider another 6 million tons of capacity highly likely to be installed in the next 2 or 3 years. There's a list of another 10 million tons of speculative capacity additions. This is a game changer. And as I said earlier, for a while, we were quite complacent. We weren't really worried about this because we knew that China had this fiber deficit. And so by virtue of the fact that China has to import a lot of the wood requirement to run their pulp capacity, we thought they can install as much as they want. It won't be competitive. But again, that's changed. That whole narrative has changed on its head. And this chart just shows you where China gets its wood from for the pulp industry. And we segregate this between what they import and what they procure domestically. And the narrative goes that for many years, they didn't have enough domestic wood to run their pulp capacity. And so they had to import a huge volume at very high cost. And these imports have come from far and wide: Australia, Brazil, Chile, South Africa, Thailand, and Vietnam. And you can see last year, they still imported 18 million tons of wood chips. But what's changed is the price of those wood chips and also the availability of wood domestically. You can see we had a step change in the volume of wood procured domestically last year. And if you look at the price of this wood, this is what you'd see. So this just shows you the evolution of the import price for Vietnamese acacia in blue and the domestic price for poplar from Shandong and eucalyptus logs from Guangxi. And you can see in the last 3 years, there's been this very significant downward trend. Now, I don't have time to show you what's happened in the rest of the world, but I can tell you that the opposite has happened. We've had wood costs inflate quite dramatically globally. And so in China, the inverse has happened, which means their competitiveness as a pulp-producing region has improved very dramatically. And so why have we seen this trend in lower wood costs? Well, firstly, the Chinese, as they've invested in pulp capacity, they've expanded their domestic plantation resource, which is only natural. We also see a lot of tree disease in China at the moment, particularly in the softwood plantations. So they're suffering from pine wilt disease. So there's a very high tree mortality rate, which means they're over-harvesting, and that's depressing the softwood log price. But the biggest game changer has been the collapse in construction industry in China. So construction activity has totally collapsed. And what we're now seeing is a reallocation of fiber from the construction industry to the pulp industry. And so the underlying message here is that this new competitiveness of the Chinese pulp industry is likely to endure for as long as the construction industry in China remains depressed. And we're not experts in Chinese construction, but when we talk to experts and economists over there, they tell us that this could be 2, 3, maybe 4 or 5 years. And that's the new world that the international pulp industry has to navigate now. And of course, with this boom in pulp production in China, we're also seeing a sense of nationalism. The Chinese paper and board producers are starting to prefer to buy pulp domestically than import it from Portugal, Chile, Brazil, you name it. And one of the reasons for that is the trade landscape today. So if they buy domestically, they can pay in cash terms, in RMB, so the domestic currency. But more importantly, the lead time is only 2 or 3 days. Whereas if you buy pulp from Spain or Portugal or Brazil, quite often the lead time is 2 or 3 months. And of course, in an environment when the tariff regime is changing almost weekly, they'd much rather have that shorter lead time than a lead time, in excess of 6 to 8 weeks. So again, that's favoring the domestic producers right now. And this is important because, with the pulp market being so depressed today, in previous cycles when that's happened, the Chinese pulp industry has been the marginal cost producer, which essentially means they would have been obliged to take downtime on their pulp lines much sooner than the rest of the world. And that's been a tremendous kind of clearing mechanism in an oversupplied market. In the last 3 pulp cycles, when the price dropped below the marginal cost of supply in China, the Chinese would slow down their pulp mills and they would buy the surplus inventory globally at a lower price than they could produce it for themselves. Today, that dynamic's changed. The Chinese industry is mostly competitive today, even though we have those record low prices, which means the burden of downtime will need to be shared by the rest of the world. And this chart just shows you how bad it is right now. So here you see the cost curves for the softwood and hardwood industry, SIF China. And the softwood price today, it's variable, but in China, it's around about $660 per ton net. And so if you look at that red line, I've just highlighted all of the capacity today in the softwood pulp industry that is not covering cash costs. So we've got about 15 million tons of capacity underwater. In the hardwood industry, the net price today is around about $530 a ton in China, which again means there's about 7 million tons of pulp capacity globally not covering cash costs. This is not sustainable, and we think that we will need to see a supply-side reaction in order to rebalance the market. And of course, that will only happen through capacity curtailment. And that's one of our kind of main features of our predictions for the next 6 to 9 months. We think we're going to see a lot of curtailment globally. Some of it, sadly, will be permanent. We're going to see some of these high-cost assets stripped out of the market. So that's the first kind of challenge I wanted to talk about today. The next challenge, which is probably a bigger challenge really, is the oversupply of paper and board. And so this chart just shows you on the right-hand side Chinese capacity of paper and board by grade. So we quantify it at about 126 million tons. I've put in there our production estimate for 2024, and that's about 85 million tons. So the net result is last year, China's paper and board industry ran at an operating rate of about 67%. That is not conducive to pricing power. And the net result, you can see on the left-hand side, it just shows you the PPI index for paper and board products in China, the red line. And what this shows you is that the Chinese paper and board market has been operating in a deflationary environment now for almost 3 years. And, this is a big problem because we see more investment going into paper and board and a bigger decoupling of the paper and board capacity versus domestic demand in China. And I think there's been a lot of noise in the last few months about this anti-involution policy in China. So this is the government policy initiative designed to try and restore inflation to various sectors. Sadly, paper and board has not been explicitly mentioned as a sector that will be targeted. Even if it is, we think it would be a double-edged sword. I think if the Chinese government was to pursue some capacity rationalization in our sector, it may restore price inflation to the industry, but logically, the capacity they would shut would probably be the non-integrated, obsolete mills which have been running for 20, 30 years. And of course, because they're non-integrated, if the government obliges their closure, that would have a fairly negative impact on market pulp demand. And just kind of an anecdote to share with you, Chenming is China's second biggest paper and board producer. It essentially went into kind of a form of bankruptcy in September last year. It's just restarting most of its assets. Again, that runs counter to the narrative from the government that they're looking to curtail non-performing assets in China right now. So again, it's a word of caution, and we think, if a lot of the assets do restart, as has been publicly communicated, then we're going to see further downward pressure on paper and board prices in China before the end of the year. So why is this a global problem? It's a global problem because China, or China's paper and board industry, is looking to export its way out of trouble. And this is kind of a familiar narrative in lots of other sectors that we see globally right now. And this chart just quantifies what I mean by that. So here you see Chinese exports of paper and board by quarter from Q1 21 through until Q2 2025. And you can see consistent growth during this time frame. And this is the Chinese paper and board producers exporting that capacity surplus. And of course, they are taking market share in a lot of the regions that they're exporting to. And of course, they're also depressing the price of paper and board because a lot of this exported volume is very competitively priced. And the Chinese can compete like this because, unlike the rest of the world, they have seen their production costs fall when the rest of the world has mostly experienced cost inflation. And that's what this chart just shows you here. You just see the evolution of the main raw materials for paper and board production as an index from January 2022. I've already discussed the wood chips, which obviously have an impact on the pulp production costs, but we also see much lower chemical and fuel and power costs in China. And actually, in China today, there's a huge chemical capacity surplus. And again, that translates into very depressed chemical pricing, which gives the Chinese paper and board producers a tremendous competitive advantage. How does this impact Europe? Well, we're starting to see a lot more Asian imports of paper and board coming into Europe. So it's not just China. We also see a lot of imports now coming in from Indonesia. And that's really what this chart just shows you. It shows you the evolution of European imports of paper and board by region of origin. And you can see that blue shaded area on the bottom is what constitutes Asia. And again, there's tremendous growth happening right now. And in some sectors, the volumes are not that big. In tissue, it's not a huge volume, but it's often that marginal ton that is coming in from exports. And it creates a lot of disturbance in the market, because in Europe, we see a lot of these end-use sectors aren't growing today in the paper and board market. They're actually contracting, and yet we have to also contend with a contracting market and more imports displacing domestic supply. And that is, I would argue, the single biggest challenge today, or one of the single biggest challenges for the European paper and board market. In the US, it's slightly different. Obviously, we're seeing a lot of tariffs now being applied in the US on imports of all goods. But this just shows you the US picture for imports of paper and board by country of origin. You can see it's been fairly stable, actually, in the last 4 years. And we would expect to see a material decline in Q3 this year. And actually, when you look at the operating rates in the US today, the paper and board industry is running at a much healthier operating rate than the rest of the world, because essentially they're trying to shut the door on a lot of this imported volume. How are we doing for time? So, what does all of this mean? Well, look, there's clearly a lot of challenges here. And I think when you talk to the major pulp producers today, that slower pace of growth in China, the affordability concerns, because they're selling to clients that cannot afford to pay more for their pulp. This is a obliging kind of an appraisal of what strategy to pursue into the future. And I think a lot of the companies now have decided it's time to deleverage from China. They've become overly exposed to the pulp cycle in China. And of course, in our sector, the biggest company today is Suzano. They've got close to 14 million tons of pulp capacity in Brazil. And they've just announced some major strategic shifts for the coming years. So firstly, they acquired 15% of the Austrian wood-based textile fiber producer Lenzing. We believe there's a good chance they will acquire the rest of those shares in the next few years. And more recently, they've announced that they will acquire a 51% share in Kimberly-Clark's tissue assets outside of the US. And of course, the value of that acquisition is partly to backward integrate about 1 million tons of their pulp. And that will be 1 million less tons that they'll need to sell into the open market. And I think when we look at a lot of pulp producers now, some of them here in Portugal, we see a real shift away from the commodity grades. Companies are looking to innovate. They're looking to backward integrate more. Good example with Altri. They're making a big move towards dissolving pulp and towards potentially, lyocell production. And again, this is a shift to take them away from that commodity eucalyptus pulp market, which is very, very leveraged to the Chinese paper and board sector. I said I'd try and finish with some kind of upbeat comments. Again, it's a lot of product innovation happening in this sector. I don't need to tell you that. You are the innovators of the global industry as scientists. I've just listed some of the product innovation that we see taking place here. We have Yucca Fluff. Again, this was initiated in Brazil from Suzano, but we now see Ence in Spain recently launching a Yucca Fluff product into the world. We see a lot of investment flowing into molded fiber, second and third generation wood-based textile fibers. So the second generation we would classify as lyocell. There's a huge amount of traction there, and that needs market pulp or pulp as a furnish. I won't list all of these, but again, there is a lot of innovation taking place. It's from a small base, but looking out into the future, we are really big believers in some of these products, and we think it will pull some of that commodity grade pulp away from the market. And as well it should, because this is my final slide. If you look at the investment horizon for our industry, we're going through a lull right now. So this chart just shows you the net addition to market pulp supply by grade from 2014 through until 2029. And you can see that we had a tremendous investment cycle in 2022 and 2023. A lot of that capacity is still being absorbed by the market. And again, that's why we have this depressed, or one of the reasons why we have depressed pulp prices today. We've got a hiatus in investment, really, for 2026 and 2027. But beyond that, the next investment cycle will start. And we've got one major project committed to in Brazil. It's Arauco Sucuri project, which is 3.5 million tons, scheduled to come on stream late 2027, more likely maybe 28 or even 29. But there's another 10 million tons of capacity being considered for Latin America in that time frame, before 2029. Realistically, I don't think any of these projects will come on stream before 2028. The single biggest impediment to getting the investment right now is the pulp price. Banks are very nervous about lending and closing the financing of these projects because they don't have visibility on what the pulp price will do in the next few years. The other impediment, and this is probably worth a separate presentation in itself, is fiber availability. So we always think of wood being readily available in Brazil and Chile, but actually, these regions used to be or used to operate with a big surplus of fiber. But because of the investment in pulp capacity in the last 10 or 15 years, if you're procuring wood from the open market, the wood prices now in Brazil are actually quite high. And again, if you're going to commit to investing $4 or $5 billion in a new pulp mill, you need to be sure that you have your fiber available when you start up. And I think some of these projects will be postponed as the companies invest in growing their plantation resources. We've covered a lot there. I think we've got 10 minutes for Q&A if there are any questions, but thank you.
Stay quite close to. So if there's any question from the audience, just identify yourself with the name and company. Aí microfone. Lá embaixo agora.
I'll be okay with this.
Hassan Jamil, North Carolina State University. You presented a lot of data, and I'm still trying to understand it, but one area that interests me a lot that you left out, but is just fluff pulp in general. And we keep hearing about yucca fluff, but I'm not sure how you make it work. But any comments on fluff pulp demand, and where do you see the future of that?
Thank you for the question. Yeah, so fluff pulp, it's about a 6 million ton market. And historically, it's shown consistent growth of about 3 to 4% per annum. In the last 3 years, the fluff pulp growth story has been challenged. And I think the epicenter of growth, as is so often in our sector, is China. And what we've seen in China coming out of COVID is record high fluff pulp prices. And this was very much linked to the supply chain issues. Fluff pulp is shipped in containers. And the Chinese did what they do best. They innovate. When they were hit with these record high pulp prices, they started to invest in technology to make modified pulp, a modified fluff pulp domestically. And so what we now see is the fluff story. It's still growing, and actually it shifted away mainly from diapers towards adult incontinence. But in terms of the trajectory, it's much more geared towards the paper pulp story now than ever before. Because every time the fluff pulp price decouples from the paper pulp price, the Chinese now have capacity domestically that can ramp up, buy paper pulp and convert it into this modified pulp to consume domestically as a replacement for the premium grades of fluff pulp. Now, it's not a big kind of component of the market which has that substitution, but it's enough to really disrupt the growth story. So that's, I would say, one of the first challenges the sector has. The second challenge is, well, I don't think this is a challenge, it's probably an opportunity, is that you're right, we now have this yucca fluff coming on. Suzano have pioneered the way. They've been operating about 100,000 tons of capacity in Brazil for the last few years. It's taken them quite a long time to penetrate the market and educate the end users how to use it. But they started to get traction, enough traction that they've invested in a second capacity there of about 400,000 tons, which will come to market at the end of this year. And of course, we now have ENCE starting up just over 100,000 tons in Spain. What I'd say is that, Yucca fluff isn't necessarily a like-for-like substitute with the premium grades coming out of the US, but it does have certain characteristics which in some end-use applications are very highly valued. And I think, most of the kind of initial volumes went into pet pads. We now see growth in other sectors. And I think because of the price disparity, again, it's a price-sensitive market, you're going to see a higher uptake of Yucca fluff. But it's going to take time because you have to educate the end users how to use it. But we see strong growth potential. And at the end of the day, if you look at fluff pulp, the main capacity is based in the US. Some of those fluff pulp mills have been underinvested in the last 20 years. We've seen a lot of capacity closure, and I think we're going to see more capacity closure in the US. So if you're a buyer of fluff pulp today, and you're highly leveraged to the US, you might want to start thinking about how can I start to blend some of that Yucca fluff into my portfolio, because they're much lower cost production units, and I think they've got a fairly decent future ahead of them. Again, I've thrown a lot at you there, but hopefully that answers the question.
Any other questions?
Here. Rona Gonzalez from NC State University. Can you comment on changes in social behavior, specifically for national brands versus private labels in hygiene tissue paper?
Gosh, that's not a subject I'm an expert in. You're talking specifically about tissue, or? Yeah, I wouldn't be able to give an informed opinion, so. One just here.
Thank you for a nice presentation. Tantrong Fitner with Voith Company. A couple questions for you, actually. You talked specifically about the fiber supply. Can you comment on the lack of fiber supply coming from Russia as a source? And then secondly, second question, the merger of Domtar and also Paper Excellence and the whole APP group, and how does that apply to availability of pulp and so forth to China and also to North America?
So your first question, sorry, was about fiber in?
The fiber supply available from Russia.
That's right. So look, when the Russian invasion of Ukraine happened, almost overnight, a very important supply of pulpwood to Europe ceased to trade. And the epicenter of this was probably Finland, actually. And lots of different grades of pulpwood were crossing the border, but the main one was birch pulpwood, about 4 million cubic meters. And this had a huge kind of ripple effect across Europe. All of a sudden, Finland went from having a fairly balanced fiber market for softwood and hardwood logs, actually, to a massively constrained market, which obliged the Finnish mills to go into the Baltic states, to go into Sweden, Norway. And all of a sudden, this created a mad scramble for pulpwood. And that scramble for pulpwood was accentuated by the spike in energy prices, because the biomass industry, which we normally call them the bottom feeders in terms of fiber demand, with the higher energy prices, their wood paying capability temporarily was the equivalent of a pulp mill or even superior. And so we started to see biomass boilers compete and outbid pulp mills for their wood. And this created a huge fiber crunch in Europe. And I would argue that the heat in the market has come off subtly, but wood prices have been really sticky, close to those record highs. And, in Europe as well, we also suffer from a pine beetle, much like the Canadians have had. And again, the epicenter for this is probably closer to Austria, Czech, Germany. And I think very soon we're going to live the long-term consequences of that as well. So we've probably had some over-harvesting to use the damaged wood. Logically, we're going to live the legacy of that very soon, which means under-harvesting to allow the forests to replenish. And so if we take a 5 to 10 year view of the wood situation in Europe, I think we may have relative stability now in the log price, but I think in 5 years or so, it's going to be higher still, and in 10 years, even higher, which again will put tremendous pressure on the competitiveness of the pulp industry. With regards to your second question, obviously we've seen a lot of consolidation in North America. Paper Excellence have been operating there for many years now. They've acquired Catalyst originally, Resolute, Domtar. You know, they're a very big, important producer of pulp, paper, and board in the US and Canada. Initially, you know, when Paper Excellence was first kind of created, they were acquiring pulp mills to backward integrate with APP's paper and board capacity in Asia. Now, I think that narrative has changed. A lot of these assets are standalone market pulp mills, and we see them continuing to invest in those assets and selling that pulp into the open market.
Well, we have time for a last question to Oliver, if there's any.
Short one. Does it work? Yes. You didn't touch environmental permitting at all, but I'm quite sure you have considered it maybe in your predictions and projections. We see in Europe, for example, it's an open question whether there's going to be any greenfield or any capacity expansions because of all directives, water directives and stuff like that, which are already influencing the game. So what about the rest of the world, and how much does it impact the distribution of capacities and closures, A here, B there, so forth?
Yeah, look, I didn't touch on it, and I'm guilty, because it is very important to the sector. And obviously in Europe, I think we do lead global standards in sustainability. And that's something the sector should be proud of. The problem with this is that sustainability still comes at a cost. And you know, when we look at various examples in our sector, the consumer isn't always prepared to pay the cost of sustainability. But again, you know, when we talk about investment in new pulp capacity in Brazil, for example, for sure, you know, the Brazilians adhere to the best-in-class standards of sustainability. You know, they're looking to get the FSC, PFC labeling. It is different in Asia. They have a much more fragmented procurement of their fiber, which makes it much harder to adhere to the sustainability criteria that we in Europe and maybe Latin America adhere to. That being said, I think the direction of travel is strong enough that, you know, when the EUDR was announced as an initiative in Europe, many of the paper and board producers that we spoke to, they thought that this would be protectionism disguised as sustainability. They thought it would be a really nice initiative to block some of those imports coming in from the rest of the world. Our view is slightly different. You know, we travel a lot to Asia and we interview the main paper and board producers frequently. I can tell you that the biggest paper and board producers, they are EUDR compliant already. They're ready to go. They wouldn't consume their own pulp necessarily. They would buy EUDR compliant pulp from Brazil, Chile, or elsewhere, or Portugal, to manufacture their paper and board to re-export to Europe. So, you know, the direction of travel is strong in Asia. They're definitely behind us, but I don't think it's necessarily an impediment to trade that they would see right now.
Okay, so now it's time to thank Oliver for your very nice presentation. And
thank you. Thanks.